China State Construction is to list in Shanghai on July the 29th. That's what we found out this morning. The estimated $7 to $7.5 billion IPO would mark the biggest listing since March 2008. Martin Hennecke joins us from the Tyche Group. Martin, what does that tell us about the resilience or strength of the Chinese market at this stage?
Yeah, we definitely think right now the Chinese economy is the strongest in the world, and also the market obviously has recovered a good deal. Of course, there's speculation, that a lot of this may not be sustainable because of the stimulus money the Chinese government has been putting in and because of the big increase in the bank lending. But what needs to be understood is, the other economies in Europe and the US, they have actually put in more money, but it's all has been going to the black holes of the banks. It's not being passed on to the companies to increase in lending. A lot of the money is still frozen up there, and the budget deficits, importantly, are moving out of control. We were just talking about sterling in the UK there. The budget deficit just doubled there in June, which we think is not sustainable. Whereas in China, the government is really sitting on a lot of cash, and they can afford actually the stimulus packages that they have been put on. So we actually like the renminbi. We also like exposure to the Chinese market as a way of gaining renminbi exposure, considering that according to the IMF purchasing power statistics, the renminbi could rise by about 2 times against other world currencies.
It's interesting, when you get a view out of Asia, it's very different from the way that the Chinese story is being analysed by many in Europe, who are concerned that there is a lack of credit control in the way that directed loan activity is taking place. They fear a significant rise in NPL later on, maybe into 2010, and that once again the government will have to deal with the problems it had before in a non-performing banking sector. Martin, is this misplaced, this fear that what the Chinese are engaged with is a risky experiment with excessive capital?
Well, at the end of the day, it's all relative, the investment. You have to put the money somewhere. If you are now in cash, thinking, the world economy is going down again, China even is too hot, even though their economy is relatively strong, is also risk because you see an uptick of inflation. In the US, you have just released of the numbers that you might have 23 trillion of total TARP money, and that's the Inspector General who has looked at the US TARP program there, and we think you could actually see an upsurge of inflation again globally, which means you have to make some kind of investment just to stay put there. Now, if you're looking at the possible problems again in the Chinese banking system that you mentioned as a result of those loans, again, look at it in comparison what's happening to the US, where you have 57 banks year to date failing compared with 25 last year, and the FDIC warned that the loan quality is the worst for a long time. The balance sheets are still deteriorating at the fastest pace there. So relatively speaking, we think the Chinese banks are actually quite strong, and the Chinese banks are passing on the money to the industry, whereas in the ECB, 440 billion just now the banks put again in last months forward, but this is largely stored back at the ECB, and there's this big concern. So we think clearly on all fronts, while we are more cautious on the equity market now, given the higher price earnings ratios, but we still would rather place our money clearly in the Chinese market, just a bit more cautious than before.
Martin, thanks for your time, sir. Martin Hennecke joining us from the Tyche Group.